market had been anticipating a pause for quite some time, but this one turned out to be a hawkish pause, or bearish, meaning bad for the market. And you can see that in the Banter bubbles chart over here. Most of the coins have taken a significant drawdown over the prior week, and especially yesterday. So yesterday, as soon as the Fed announced that they were pausing the interest rate hikes, and then that followed on with the FOMC statement, it led to a major sell-off. So I'm going to identify today whether we're going to see continuation down from those levels, as well as the one bullish case that bulls still will be holding on to their final line in the sand. So without further ado, let's get straight into the show. And I wanted to start off over here with TED Talks Macro. I always find that he does a fantastic job of summarizing what the Fed has to say. So he says, a hawkish pause it is. The Fed leave the Fed funds rate target unchanged at 50 to 50.25 basis point, aka they've now paused their interest rate hikes, but the terminal rate projected via the dot plot has been revised higher from 5.1% previously to now 5.6%, signaling that they may not actually yet be done hiking. And he says holding the target range steady at this meeting allows the committee to assess additional information and its implication for monetary policy. So basically suggesting that the Fed are not necessarily sure that we're out of the woods yet. And this is the dot plot. So the dot plot, the way that it works, essentially each Fed member comes and they put a little dot on where they think that the future Fed funds rate will be. And this is kind of where they voted, the majority of them, leading to what TED Talk said over here is now 5.6% rate. So pretty much raising the bar. That means that there is a possibility that they're going to continue to raise. And if you look over here, he says the key takeaways from the FOMC meeting, whereby the press conference was the following: the Fed paused. No change to the current quantitative tightening program, meaning that they're going to continue to reduce liquidity from the markets. And the illiquid market that we're in is one of the reasons why you see these big moves out of nowhere when you least expect it. I'm going to show you the liquidity chart as well and what that means for crypto going forward. He says here, Powell said that no policymakers see rate cuts this year. It will be appropriate to cut rates when inflation comes down. Core PCE is now the main concern, and the Fed have revised their dot plot higher, as we just said, to 5.6%. The Fed projections for GDP growth and employment are now more optimistic, though, so that's one good thing. And the market's now pricing in 25 basis point rate hike at the next meeting in July. So basically just a pause and then another hike, which is going to obviously be elevating the rate hikes to 5.25 to 5.5. And what does that mean? Well, essentially, if you look over here, historically, what's actually taken place when the Fed has paused, this is correlating that to the S&P 500. And it's something that we covered a very, very long time ago. We covered this months ago, or actually even probably about a year ago, is that when the Fed does eventually pause or pivot, it actually leads exactly 1 month after the pause to a pretty substantial crash. So will this time be the same? Well, only time will tell, right? We have to play each week as it comes, because macroeconomics can be incredibly complex in the sense that there's so many different moving parts and so many things that you need to consider, so many different policies at play, and ultimately that will affect what the market does, which is why I like TA, right? I like to keep it simple. Otherwise it gets very confusing. But essentially, if you look over here, 2001, pause, and prices came rapidly down on the S&P 500. We paused over here. They continued to rally a little bit into 2008, and then massive sell-off when they started to cut those interest rates. Same thing over here, pause and big sell-off, and then pause over here. And the question is, are we going to get the same thing? We might continue to rally a little bit higher, climbing that wall of worry, and then is there going to be a possibility that things sell off a lot deeper? It is always something that could potentially take place, because the difference is that if you look over here, the Fed funds rate was obviously raised, interest rates were raised whilst the crypto market was coming down, which is unique. This is not something that we've seen in the past. Usually they typically are raising the Fed funds rate or the interest rates into an inclining market, into a healthy market. Now we had an unhealthy market coming down, cooling off after a lot of leverage in the market and they're raising the interest rate. So it basically means that crypto got double knocked over there. So if you look over here, this is kind of what we're looking at, the CPI year on year and the core CPI month on month. The year on year is continuing to go down, which is showing positive signs. But we need to see this move all the way down towards the Fed's target, which is going to be 2% on the interest rate, right? So they'll pause and then continue to raise, right? Pause and raise, and they'll constantly reassess what's going on with the year on year, watching how it moves down, if it's going to be sticky and start to bounce back, because this is what inflation does, right? It becomes entrenched, whereby oftentimes it bounces back and you start to lose control. So they don't want that to happen. So the next thing that they're going to be most focused on is coming up on the 30th of June. That's on Friday, the 30th of June. Mark that off on your calendar. And that's going to be the core PCE, which is usually a better measure for them on what's actually going on with inflation. And you can see that has slowly started to come down, but not convincingly enough. So that's what we're watching over there. Now, what does that mean for the stock market? Well, if you look at the stock market, it did break above its range highs, but we outlined that we've had almost 14 days of up only, and there is magic in the number 7, right? Multiples of 7 within markets. Oftentimes, that's when you start to see a pullback, and you have guys, traders like 𝗕𝗏𝗪, who has created the TD sequential system, which also works on number count. So I don't really focus too much on that, but if you are interested, go and look up 𝗕𝗏𝗪 and you'll find out exactly what I mean. It usually signals the exhaustion of a trend or an overextended move, and you are looking at a little bit of a pullback sometime soon within the stock market, coming up towards its major resistance. Now, so far, since its trend line, it's rallied exactly 8.09%. And if it were to come into the gray box territory, which is the major resistance, you're looking at now only a 2% further upside move. And then you would expect a major resistance level to get hit. That major resistance is obviously based off of this region over here, where we set in a major top, pulled back, we deviated over those highs, came back, resistance, rejected. You would expect a reaction in there. Remember, when it comes to looking at support and resistance levels, that the more time that passes, right? So even though this level got knocked into multiple times, a lot of time has passed over here. The last time that we revisited that region was April of 2022, which means that it's over 1 year since we hit that level. That means that this level is probably reinforced as resistance and less likely to break on the very first crack. So expect a rejection from that zone. Now, what that means is, if you look over here at the S&P 500 divided by the M2 money supply, every time that we've come into that zone, of which we're hitting right into that level right now, you expect a major event to take place after that. Now, we don't have that much historical data. We only have 1, 2, 3, 4. This would be the 5th time that we've come into that zone. But the stars are essentially aligning with everything that I have shown you. And there is a possibility that this has all just been a major relief rally, and we are coming towards the end of that. Now, what is the pros and the cons of being long or short? Well, it's very simple, right? The pros, let's talk purely about Bitcoin right now. Let's assume that Bitcoin has finished what was just a relief rally and we're going to continue down. If you're a bear, obviously you're out of your position. What is your con? Well, your pros, firstly, is that if prices do go down, then you're not going to be locked in positions, right? You're not going to lose any money. If prices do go up and you start to see the stock market continue to climb, well, that's okay. You're going to lose out on a small amount of opportunity. And once all those major resistances have been cleared and Bitcoin negates the possibility of this being a relief rally and starts to transition into a full-on bull run, that's okay. You've missed out a very small amount of opportunity. And when all of these metrics align, S&P 500 breaks key levels, and so does Bitcoin, then you can just get in a little bit higher. If you are a bull, though, what are the pros and cons? Well, the pros are that you have limited upside coming into resistance, and the cons are, if you're going to be bullish and you're wrong and it is a relief rally and everything's going to turn back over, well, you're going to lose a significant amount of money that you're going to struggle to ever get back. Because remember the drawdown death trap. The drawdown death trap essentially suggests that as you start to lose more and more money, you need significantly higher gains to recapture those losses. Meaning, once you've lost 50% of your account, you now need 100% to get it back. If you start to lose 80% of your account, you're now talking about 900% plus profits in order to get back to break even. So keep that in mind. All right, let's move on over here. The dollar had a major sweep yesterday. I put this in the daily candle. I marked off this 102.5 level. This region over here is an important zone. We didn't sweep directly into that, so we'll still pay attention to this level, but during the pause, the dollar started to drop significantly, and as soon as the information was processed and the Fed started to hold their meeting, the dollar started to rally back up aggressively. And the reason for this is everything that I've just suggested, which is that potentially they're going to continue to raise rates at the next meeting, and moving on from that point. All right, guys, take 1 second out of your time to smash the like button on the video. It does help to get the show content out there. And then also, if you do want to trade crypto, Forex, or commodities, make sure to check out Prime XBT. They do have a sign-up bonus. Use my link in the description below and make sure that you type in Kyledoops for the sign-up promo code. I know yesterday a bunch of you messaged me on Twitter. I said that I have those 20% bonuses. I will respond with the bonuses. I just didn't have time yesterday. I was doing other recordings. So we'll get to that later on after the show. I'll respond to all of you. Okay, the decorrelation between Bitcoin and the stock market continues to be something of significance over here. Massive sell-off on Bitcoin and still continuing to push up with the Nasdaq and the S&P 500. So eventually there is going to be some sort of reversion back towards the mean, which is the middle ground level. Use that to your advantage when you see Bitcoin coming into a key level. This is why I'm telling you this. Bitcoin, if it sweeps a key level like it has and it reclaims that level, that could now be your signal for a short-term long opportunity, because you're looking forward to revert somewhat back towards the mean, and then maybe the stock market also comes down a little bit and they converge back towards one another. So I am keeping an eye out on that. If you look over here at Wu Blockchain, they say over here that if you look at the spot volumes, it's 23 billion in 24 hours. It is the minimum that they've seen since winter of 2019. Behind the scenes, exchange started asking projects to now manage their volumes, liquidity, etc., because of delistings. Otherwise, they will delist them. And then you can see price movements for 20 to 30% within 24 hours, even for large cap coins. So the volatility is high, right? And the reason for that is because the liquidity is so low within the market. If you look over here at the net US liquidity, that has slowly been crawling up, but it's nothing of major significance yet. It's not enough to make the market healthy. People's Bank of China liquidity is absolutely diminished. It's gone to pretty much zero. There is no liquidity. I know there's been speculation that China might create some sort of stimulus back into the market. So we'll be watching this chart. This chart will provide us with the evidence if the histogram starts to pick up that those rumors are in fact true, and then potentially we can see crypto rally back up. But the big thing over here is the USD Stablecoin Supply. It continues in a very strong downtrend, and until such time as we see this start to flatten out and maybe reaccumulate towards the upside, it is going to be very difficult for crypto in general to catch a bid. And that's what you've been seeing, right? Although the stock market's been going up, the crypto market has not. And this is a big reason, is the USD stablecoin supplies continues to go down. And there is some information which recently just came out on Tether. I haven't even been able to scrutinize it yet, but we'll get into that towards the end of the show. I've saved it for the very end. They say that Tether may be depegging. I see you guys in the comments as well mentioning that. By the way, speaking of which, in the comments over there, let me know if you are present. I see we got OG Banter, 𝗕𝗏𝗵𝗺, Easy, Mackie Bob. We got RENKO V, we got Jordan, we got Mafeka, Vincent, Olivia, the Equalizer, Plan X, we got Spooner, Chaos is always here, Knight. I don't see BanterGirl. Where's BanterGirl? BanterGirl is not here today. Smash the like button, guys. Help me to get the show content out there, and then let's continue with the information over here. So looking at total market cap, as we know, broke the support level. It is coming into the mid-range. So potentially there could be some sort of a bid there. I'm going to show you the long-term targets that we've been looking at for the last couple of days on Bitcoin are also coming into a key level. And could it be that those coincide and bounce off of the mid-range? Well, we'll have to wait a little bit longer to see, but hopefully there is a little bit of a bid. Look at the altcoin market getting absolutely wrecked still. You're about to make a new swing low in relation to the left-hand side on total 2, which is Ethereum and the altcoins, right? So sitting right now at those wick lows at 496 billion, but you have a close that is lower, right? To see that, you just put on a line chart. There you go. Look at the line chart showing already on a 3-day time frame. You've now closed candles lower than that higher low. You've broken the trend line down. That suggests you've made a new swing low, and you would expect the next bounce up is going to be a low high, and then it's just going to bleed out over time, continuation down, which is why my show yesterday might not have been what everybody wants to hear, but I'm here to tell you the truth, right? I'm not here to sugarcoat it because at the end of the day, you're probably going to make more money if you know what the truth is. And the truth is that altcoins are still going to probably continue to bleed out against their Bitcoin pairing. And some of those against Bitcoin, ultimately, they will go to zero. Watch yesterday's show if you want more information on that, had you missed it. All right, look at Total 3 over here. Total 3 coming into also the range low, the orange line over there, but we're still following the parallel channel towards the downside. If this range low starts to have any closes below the orange at 301 billion on a 3-day time frame, that will signal continuation down. Ultimately, even if you do get a bounce over here, it's probably an opportunity to exit some of your altcoin positions. I say that with extreme caution. It's not financial advice, and I'm not a financial advisor, because obviously the markets change, right? The markets change, but in the short term, that's exactly what it looks like. This would be a lower high coming into resistance, and ultimately that would be where I would probably lay off any of my altcoins, expecting further continuation into this $233 billion level. All right, I also posted this without any comment. Over here, this is the Bitcoin chart. This was on Twitter. I made this post, no comment or anything. And it was very interesting actually to read the comment. Look, I just wrote Bitcoin and I posted that there. And that was it. And if you read over here, some people were calling me a hopeless bear. What's wrong with me? They were saying I'm flooding the market, which I find interesting, right? Because even those who are bullish are defending their bias, and they can't deny that the chart speaks for itself. When you zoom out, you can see we've come into a key level of resistance on the monthly time frame, and now you have continuation of that candle, right, on the monthly candle. And now we're waiting to see, is this going to form on a monthly time frame an opportunity to bounce off of the mid-range, or is it a full-on deviation back into the range, which is going to lead to continuation much lower and bleed out all the way towards that $13,880 level, which is not only a key level on the monthly chart over here, but it's a key level on the weekly chart as well as a key yearly level. So a lot of confluence. Yearly, quarterly, weekly, and monthly level, it's all key at 13,880, and that level never got tagged over here, right? So when price came down here, we opened the year straight towards the upside. If you move this onto a year, let's look at the yearly chart, and I'll just show you as an example, 12 months. So that is our yearly candle, right? No wick. Let's turn all of that off. Let's see, hide all. There you go. No wick over there. No wick whatsoever. So that is the question, right? That's the $1 million question. Is there going to be a wick? Is this yearly candle going to have a wick? All the other yearly candles have a wick, even though it's a small one, right? Look at that yearly candle. It is still a small wick. So what could potentially happen is you could see something like that, whereby price does come down, take out the prior year low, leave a little bit of a wick over here, and then maybe it bounces up and still somehow closes green. Maybe it closes red like that one. But at the end of the day, you would think that there's at least going to be a wick that's going to come back into the market. So we'll be watching that. That's a long time out. Just open up your mind to the possibility that if this is a deviation and prices are going to come down, that is something that could happen. All right, let's look over here at Bitcoin with the 21 and the 200 EMA on the weekly chart. So quickly make that bigger. Ultimately, what we said yesterday is until such time as the bulls take out 28,070, it's really no opportunity to go long here. You need to break above 28,070 to break the structure, to break the high time frame structure. You need to see something like that towards the upside. Once you see that, cool, you can say structure was broken over here, and now you can look to buy any pullback after that. That has not happened, right? Instead, prices have continued down, but now we are coming into this breaker or order block, whatever it is that you want to call it, the inefficiency candle from the massive move up. These inefficiency candles have a high probability of being refilled, and it's been a long wait, but here we come, we're on our way there. Now, what I am saying about this, if you see continuation down below, even if you break the yellow trend line and you come down into the pink box, no matter how deep, even if it's 22,000 around there, 22,200, if you see it bounce back up and close as a wick, right? So you see something like that, then that is the opportunity, right? That's showing you, it's confirming that bulls defended that level at all costs. You came into the order block, bounce off that level, and now it creates the opportunity to go long rather than waiting for higher prices and waiting for a break of that 28K level. So you can kind of front run that idea if that happens. All right, looking at the 9 and the 18 moving average on the weekly chart with the Gaussian channel intact, we have one level of support, right? Well, you have the dotted line over here, which is the diagonal. You also have the middle of the Gaussian channel. But the question is, will we hold that? If you start to break that, remember there is going to be fear that will come into the market and you might accelerate down. My lowest target that I'd be looking at, whereby I say bulls could potentially still survive this, and again, I want to emphasize it has to be on a wick basis, right, is at this level, 20,879. Why did I choose this level? Well, oftentimes, similar to CME gaps, the wicks have a probability of being filled 50% of the way through. So if you take 50% of that wick, that's exactly where that price level comes into, 20,879. Okay, and then we need to reevaluate, because if the 9 and the 18 moving average over here start to cross over bearish, meaning the white goes below the yellow and you have a bearish cross, then that changes the whole macro picture. And then you can start to say that monthly chart that I showed you is going to probably play down all the way into the middle of that range, potentially back to the bottom of the range, which is prices we haven't seen since January. Okay, looking at this is the 4-day chart. Same story over here. That was what we're looking at, right? Waiting for a break above this level, a big move up or a big move down. We've now started to see expansion towards the downside. Now, I want to be clear, you don't blindly bid this level. Wait to see the momentum into that zone. If you're confused and you don't know what to do, follow me on Twitter. If I do take a trade, I am going to update you. I told you I have every intention of buying this level, but it all depends on how we get into that level, right? If we close this candle here, if we just hang around this level over the next couple of hours to days, and then we open another one and start to move even lower, well, then I would say with high conviction, this level is going to break. But if we come down fast and you move into that level aggressively today or maybe over the weekend and quickly bounce up, then you have your confirmation, right? Okay, Bitcoin on the RENKO chart, keeping it super simple, super clean, very easy to read. We had resistance, prior consolidation level before the major breakdown, first retest of that resistance. I mean, what are you thinking, that we're just going to smash this on the first go? Probably not. And I said that a lot while we were up here. This is why I sold all my Bitcoin at 28,500. I was looking at your best case scenario, maybe a bit of a further push above the resistance to create a deviation and then come down, but Bitcoin wasn't even able to do that. RENKO, again, keeping it simple, is calling for 23,991. You guys know that I've said it a lot, so keep an eye out on that level. Now, what does that mean for Bitcoin and its ranges? Well, simply put, if you look at this chart over here, we were always looking for quite a long time now at this level to become the new range, right? So this could be the new range. This was the old range that we were operating within, and then that was the little deviation. This is why we said we drew the gray box. We thought maybe the same way you had a deviation on the downside, maybe we would have pushed a little bit higher here and bulls would have got people more excited creating the deviation there. But as you can see, we didn't even make it to that level. We rejected before that zone. But now we're coming below what is the mid-range of the overall range, right? So if you treat this all as one big range, that's your range high. That's a bit skewed. That's your range low. This is now the mid-range. It's a key level. What does that mean? That means if you start to see price hold underneath here like this and continue to consolidate underneath that zone, which is 25,000, well, then you're breaking back down into a new range. You're opening up the possibility that price is going to come back into this zone again. So operating between, what is that, about 17,000 and about 25,000. That would be the new area that I'm be looking to play. But I'm also watching carefully, and this is why I say you can't blindly long. Follow me on Twitter if you are confused. I'll wait to see if there's a reaction off here. You might just scare people, break through even to 23K, and then snap back into that range. If that happens, that is a swing failure pattern. That would be my signal and opportunity to go long. And then I'd be looking to play this zone once again, right? So between 32,000 and 25 would be where I would expect price to spend the next couple of months. Let's just fix that. There you go. And I would expect price to operate within that zone. Cool. I hope that makes sense. Let me know in the comments, does that make sense? I see again a lot of comments over here. Tether is not fine, bro. Check the chart. Check the chart, bro. Just look. Tether's in trouble. Okay, let's look. You guys are worrying me here. Let's just bring up the chart. Where were we within this? Okay, we passed that section. We passed that section. Here we were. Okay, let's bring up Tether. Tether. Okay, let's see. Tether, guys, why? I mean, Tether's obviously it's come down a bit. Look at the price. It's 996. I mean, is that the end of the world? I don't know. That's not the Tether's gone down much more than that before. This still looks within the range of normality to me. Look, if I go here, look at the spikes. I mean, it is coming down, but let's go on max. It looks like a flat line to me. I mean, this is when you start to get scared, right? When you see all these levels on the bottom, big spikes up. No one complains about that. That's free money for you if you're holding Tether. But it looks pretty flat. I may as well just bring it up while we're at it because you guys are making it a topic here now. So this is essentially what's going on. Small cap scientist speculates that he says, I'd assume that the majority of the USDT movement is coming from Binance and Binance US. They're negotiating with the SEC and they owe the judge an update today, which is Thursday, right? They have to tell the judge what's going on. He said, go home, think about it. Let's see if we can come to a resolution. And then they say a few days notice isn't much to move billions of dollars in a very low liquid environment. And consequently, that may be one of the reasons. Now, I would say that Tether holding 50% of the entire stablecoin supply is not necessarily something I want to see because it's now one point of failure, right? If Operation Choke Point 2.0 is a thing and the government and the powers that be are truly coming for crypto, then of course that creates a scary environment, right? It means that now all they need to do is shut down Tether and they just wiped out half of the crypto market. And Rand covered on one of his shows before, he said it would be very easy for them to do that. They just need to prove to ban it, at least in the US, that nefarious activities took place at least once with Tether, which we know is 100% guaranteed that that has happened in the past, meaning that if somebody laundered money using Tether, well, now they obviously fail that test, and that means that it can be banned in the US. So that's pretty scary. That is 50%. I've always said that I'd rather see a distribution between REI, DAI, BUSD, USDC, USDT. I think Gemini have a stable coin. Rather a distribution amongst all of those as opposed to just holding everything in one. Okay, let's move on though. So Tether, it's not over yet, guys. It's not over yet. Let's just we'll watch Tether. I mean, I hope nothing changes over there with the peg, but I don't think it's cause for concern as of yet. And if you are worried, distribute some of your stables across multiple different stable coins, and I'm sure that you'll be okay. Okay, next. Bitcoin over here. We have now closed a candle below the 200 exponential moving average. We are also holding below the pivot level. Remember, the pivot level changes every day. Today, it's $25,553, meaning bulls need to get price above that if they want to turn the RSI back up and put momentum in their favor. Otherwise, bears are in full control over here. And the first point that bulls might stop them is going to be this level, right? The 200 moving average. But again, as I've said, it depends on how you get to that level, because if you look at Ethereum, I don't like the way that Ethereum is at that level. And I think that I'm more inclined to think it's going to break this level, sweep lower, and then I'd rather wait for a reclaim of the 200 before going long. So if you look on Ethereum, I did also adjust the parallel channel going towards the downside. Before, it was something like this. And I just noticed this morning, this is a line of better fit. You still have the touch points underneath. You have the touch points above. It's a good level. So let's zoom in on ETH. What do I mean? If I don't bid it over here, because you already had the daily close, which took place right over there, and now you have the next candle, which is opened directly into that resistance. Therefore, it suggests to me that there's a good chance that you're going to break below. So I would rather wait for the break below and not just blindly buy this. If it stops there, great, and it comes back up. Once it reclaims that level, once it reclaims the 200 moving average, then I now have a low, which I can use as my invalidation and say, hey, that's the stop. The stop goes there, entering in long over here, and then you can take it back up. Okay, hope that helps. That is ETH. Let's move on very quickly to the next ones. Okay, 4-hour time frame, Bitcoin, the 50 and 200 EMA continue to act as resistance. Price tried to push through that level yesterday, failed to do so, and our squiggly lines still remain perfectly intact, which I drew all the way back here. Look, you had the move down, you had the move up, came a little bit higher than expected, and then I was looking for the push down. So definitely give me some clout over there, because I think that's pretty damn good. It is by luck, right? It wasn't planned like that. The drawing just worked out very well. And then you're looking for that to line up with the main diagonal trend line on the 4-hour time frame, and you can play that as a mean reversion, right? What I mean by mean reversion, well, if it comes into that level and that is a sticky zone where price could bounce, you could play that as a short-term bounce, which will take it up towards, again, the 50 and 200 EMA, which is resistance. Okay, moving on. Yesterday, I did outline before the rate hike. I said that rate hike decision about to come out. Notice the squiggly lines, waiting for a deviation of one side, quite a distance if we take the top side liquidity first, but honestly, anything can happen. So more probable that you're obviously going to take the lower side liquidity. So bringing up the chart over here, here it is. That's exactly what happened. Combined with the Lux Algo indicator over here, you had the order block, which led to the breakdown. Big volume kicked in. 34% of all the volume on the hourly chart led to the big sell-off, and price came down. Personally, I don't think that the selling is done yet, and the reason why is because I don't see strong demand which is kicked in. I don't see any wicks. The market has now had a chance to digest this information. So if you look over here, look at that wick. Let's just change those colors. The market has had a chance to digest that, and it didn't rally it up from there. Instead, it rolled back over, and that tells me that most likely you're going to have another spike towards the downside. Once that happens, then we can reevaluate. If that candle closes up strong as a big wick, and this area is a wick over here, and the body closes above, something like that in that area, then now you have something to work with. Ultimately, if you really want to play it safe, you can wait for exactly what I drew over here with the lines, a deviation back into the range. Your range low is at 25,351. If you see price coming up, and watch this level carefully, and it starts to reject off that level, incredibly bearish, you start to open up the possibility, like I showed you on the daily time frame, that you're now operating within a new range, that new range being between $17,000 and $25,000. So be careful of that. Keep your eyes on the chart. Stay focused, because there is a lot that's going on. High Block Capital says over here, global accounts long percentage of Binance is now at 75%, implying that 75.66% of accounts are actually long. Over the last 365 days, this is a really massive outlier, pretty much the yearly high. Historically, there have been 16,255 occurrences out of 209,221 on the 5-minute time frame. And in the last 2 years, between the 74 to 85% range. I'll explain what all this means to you now. On every future period, they say a 5 minutes, 15 minute, 1 hour, 4 hour, 1 day, 3 day, and 5 days later, price has dropped by a significant higher rate than the benchmark, which is how BTC price moves on average. So essentially what they're suggesting over here is based on what they're seeing on chain. They are looking for potentially continuation of this trend towards the downside. Where are the liquidation levels? Well, ultimately, liquidity is now mostly stacked towards the upside. But remember, any spikes that come up over there might just send price back down again. It could just be simply that, grabbing enough liquidity, grabbing enough momentum in the market to continue the leg down. So be careful. Over here, liquidity is mostly stacked on the 7-day time frame at 26,850. We have not yet hit that level. Let's look at the monthly time frame. See if there's any more info, because it is inconclusive over here. They're not giving a lot. If you look on the low time frames, the liquidity is stacked all over the place. Okay, so here we have a bit more info. So here's where the main liquidity lies, right? So you can expect there is a lot of orders that are stacked around that 200-day moving average on Bitcoin. And Ethereum will look the same, by the way, which means that there is a possibility that we do get a bounce. If you do lose that level, your next leg down that you're looking at is about that 21,500, which, remember, I showed you as 50% of the way into that wick. Do you see why you work level to level? And the way you don't even need these fancy charts, by the way, guys. You can look at the wicks. The wicks indicate where liquidity is. So study the wicks. Okay, let's move on. In other news, we also have over here Cameron. Cameron's going on and on about the SEC. There's something called a Promethean storyline, which is a big conspiracy of the day. I'll let Rand cover that in detail, but he's basically saying that the SEC have now green-lit approved a vaporware exchange to pretend that there's a happy path to becoming a compliant crypto exchange, and you can't make this stuff up. So it looks like despite all of Coinbase's efforts with something like 3,000 or 4,000 different occurrences of where they reach out to the SEC for clarity, the SEC looks to be approving this vaporware exchange called Prometheum. So we'll look into that. And he says over here, what's the moral of the story? If you have a fake business, you'll get approved by the SEC government. And if you have a real business, then you'll get sued by the SEC. And that pretty much brings us to the end, guys. Make sure you check out CoinW as well. If you are in the US and you're struggling to get your money onto exchanges and struggling to trade, CoinW do offer a KYC free exchange. You don't need any KYC or VPNs or anything like that. You can deposit and you can withdraw $4,000 a day without KYCing, and you don't even need a VPN to do that. They do have a sign-up bonus as well. The sign-up bonus is below. If you look over here, CoinW, available to US customers, no KYC required. Sign up, I think you get $100 sign-up bonus, and you can also win a MacBook Pro. So that is it, guys. That's a wrap. I will see everybody on tomorrow's show. I hope you're all safe out there, guys. I hope that nobody lost money or got trapped. I outlined on Monday's show as well that there is an incoming trap. If you see a big spike up, go look at the thumbnail. You can expect it's going to get slammed down. So I think we've nailed this week. Congratulations to all of you out there who listened and followed along. And I will see you all tomorrow. Have a great day. Cheers for now.